All right, David Nicholas is with us. He is our market watcher. Just 3 or 4 minutes before we go on with the market trading. Look, rising interest rates have clearly upset tech stocks big time. Why is that? Make the relationship. Why the tech stock sell-off as rates rise?
Stuart, there's certainly been a shift in sentiment, but the macro piece to that, there's two reasons that I believe. The first one is really demand. So when demand declines significantly like it did in 2020, 2021 because of COVID, tech companies can do very well because it doesn't rely on the traditional walking into a store to buy a product, getting on a plane, checking into a hotel, going to a restaurant. It can excel in periods when demand drops. So that's the first reason. The second reason is pretty simple, just valuations. When rates are low like they are, that allows tech valuations to increase. So as rates rise, the question is, can we still afford to pay those lofty premiums for these companies as rates are rising? And why are rates rising? It's a good thing, Stuart. That's telling us that the economy should be coming back. Demand should be coming back. But again, that may bode bad for tech stocks, better for these value names that rely on good old-fashioned, robust demand to do well. And that's why I think you saw yesterday value names do so well.
Okay, the yield on the 10-year Treasury, that's the key interest rate. Right now it's at 1.64, 1.65%. What happens if it goes to 2%? Just for example, 2%, what happens?
Yeah, Stuart, we've seen rates drop for a period of time now. That's reversing. So what happens was rates have been dropping, stocks have become unhinged from economic fundamentals. I think we have a reset at 2%. I don't think we're going to see the same detachment from fundamentals. Bodes very bad for tech stocks. But I think investors need to realize, if you just look at the technical of the 10-year, I think 175 for the 10-year is no question this year. If we break 175, I think we hit 2% this year. That's where we start having these conversations on can these large tech names justify those valuations?
Well, spell it out. I mean, if we do hit 2%, is there a big sell-off in big tech?
Big tech, yes. Value names in the S&P, no. Broader names in the Dow, no. Large cap tech, I think you're going to see some selling pressures just because of those valuations have just gotten too detached from reality.
Okay, look, we've had quite a dip in big tech recently. Are you buying that dip?
We're not, Stuart. And I want to make a difference between tech. Not all tech companies are the same. You've got the wide moat stocks like your Microsofts and your Apples that I think are still going to do well. But you've got companies like Shopify, Okta that have just had these extreme valuations. That we're not buying that dip. We're shifting some value names, right? We're looking at names like Macy's, traditional names that have started to rebound. Names like GM and Ford that we've talked a lot about. Names like IBM as a tech name, 3% dividend. That's trading at an extremely low multiple. Those are the names we're looking at right now, Stuart.
All right. Thanks for joining us, David. Good timing on that one, and we'll see you again real soon.